and welcome back to another episode of Wealthi UK. This week, I've got Gavriel Merkado from REalyse on the show with me. It's great to have you here, Gavriel. I'm really looking forward to having a chat with you today. And for those of you out there that are listening and want to know what REalyse is a data-driven platform that helps provide a comprehensive overview of the UK market. And I'm sure Gavriel will dig a bit deeper into the explanation of REalyse, but to give you a general idea, they gather a lot of data on the UK property market and provide some really good information for groups like ourselves and anyone out there looking to invest in the UK market and provide a really good overview of the market. But it's great to have you here and thank you for joining me. How are things going?
Thanks, Chris. Well, thanks for the invite. Yeah, things are going very well. I think the description you gave is spot on. Yeah, we're a real estate data analytics business. So development companies, investment companies, lenders, consultants, anyone that wants to understand what's going on in UK residential property, from whether it's they're interested in pricing and rents and demographic trends, asset ownership. We have all that data and we put it together in a nice, hopefully easy to use platform. You'll have to comment on the ease of use. I'm quite used to it, but I think you're relatively new.
No, exactly. It's a great platform. I actually had a demo with one of your team members on Thursday last week. Natalia, if you're out there and listening, thank you for running me through the demo last week. But it's a great platform and it provides a lot of great information, especially when we're looking at trends that we've been experiencing in the UK since really the start of the pandemic. I guess it's more relevant for people out there considering investments at the moment, but can also provide that historical data and give you a good overview of what is happening in the UK. But just for people who are listening out there and maybe curious about how it all started, but how did you come up with the idea to create the platform? What really drove you to create REalyse?
I'd love to say it was a light bulb moment, but it took a bit of time. I started off originally I worked in finance, in hedge funds and that sort of thing. And then I went to work in property development at some very big companies. And after a few years of doing that, it just kind of struck me that these big companies were trying to make investment decisions with information that I just felt really wasn't good enough. So a bit of tinkering around, started to build something for us to use internally in one of the companies I was working at. And then after, I want to say about a year or so, thought, well, hold on a minute, it must be other people who've got this problem. Maybe there's a product in here.
Perfect. That's interesting. It's definitely a very handy tool and something that I think a lot of people out there will get a lot of use out of, a lot of value from it as well. It's definitely going to play a big part in our business growth. I can imagine we're pulling apart trends and market trends in these areas that we are focusing on at the moment. But to talk about these trends at the moment, what sort of shift or movement have you seen in the UK in terms of property?
Sure. Well, the pandemic has obviously created a lot of different changes, accelerated some things, slowed other things down. That's kind of obvious, a bit of a given now, but digging into it, I think one of the interesting things, there's a kind of a reasonably large increase in planning applications that are being processed this year compared to the previous year. But interestingly, there's a lot of tightness in the construction market. I think that's a kind of a global phenomenon. It's not just the UK that's experiencing that. So there's this sort of question mark of all these new developments that are being put through planning. And I was looking specifically at large ones ahead of this call. Are they actually going to have the materials in place and the suppliers in place to be able to deliver them? Or is that constrained development market that existed in 2020 going to carry through, but just for a different set of reasons? I think that's kind of an interesting thing to look out for, and probably more this year.
Definitely, I agree. As construction costs are going up, it's harder to source materials in this day and age now. And I think it goes back to almost the roots of when you're looking at an investment and the importance of having a strong development group or a builder behind each development as well. And I think that's got an even stronger part to play at the moment, because you don't want to be dealing with, let's say a small family-run development business. They're relatively new to the industry and don't have a great deal of track record. Whereas when you're dealing with these more reputable development groups, I think they're definitely going to have a bigger part to play in the current market, as we've seen, as you've mentioned, that shift through construction costs and materials as well.
Yeah.
It's I think
What I've heard. Oh, sorry to jump in there. It's just that I had a call on the subject this morning, and it was interesting because it's not necessarily to do with the size of the company. It seems to be about how the contractors have negotiated their own contracts with their suppliers is more the determining factor of whether or not construction is going to be delayed or successful. But if at some point along the chain someone's got variable pricing, then all of a sudden you discover that the guy that's doing the woodwork, or the company that's doing the woodwork, hasn't locked in pricing with their supplier, and now they can't deliver. That's where the issue is, and that can be a big company, a small company, anyone in between.
It's everyone trying to get their cut from the pie almost. Everyone want to get their hands involved. That's interesting. But and then when we're looking at buyers' appetite and purchasers' appetite, has there been a shift with what people are looking to purchase now? Yeah,
totally. I think everyone's sort of familiar with the news flow that has been out and about around people looking for outside space and moving to suburbs or more rural locations. That's definitely true, and we've seen that in the data. People are putting a premium on balconies, on gardens, on having that extra bedroom. It does seem to have quietened down a little bit since the kind of the lockdown period in the UK has ended. Touch wood.
Exactly.
I think there's some people that perhaps moved out for a few months to the countryside now going, actually, we kind of want to go back into town again.
It's funny that I was actually just on the phone to a real estate agent just before, and he mentioned that exact point, saying that now his inquiry for London real estate has gone back through the roof, and everyone calling him up 12, 18 months ago saying, I want to sell my house, I want to move out of London, is now calling him up again saying, I'm a bit bored of the countryside. Let's go back to the hustle and bustle. We want the action, which is fair enough. I can see where they're coming from. Yeah, exactly. And the same goes from a rental perspective as well. I'm looking to move flats at the moment, hence the phone call. And I said to him, we're looking for something that has some outdoor space. We want a little garden, a patio, a balcony, whatever it may be. But for properties with those inclusions, with that little bit of outdoor space, the prices of them are not significant, but you're looking at a slightly more or slightly increased price or rental price on these properties. And at the same time, it's creating more of a competitive rental market for those properties. They're not staying on the market very long. In most cases, 7 to 10 days from what he was telling me. And it goes to show that the importance of having that outdoor space for people that live in these major cities, be it London or Birmingham, Manchester, Liverpool, but they want that connect or want an aspect of their property that is the outdoors, be on the back of a park if you're in a building that doesn't have apartments, or having that outdoor space close by. So I think that it's going to be interesting to see how that mindset continues to play a part in the growth of the UK real estate market, and if we'll continue to have that kind of mindset to that it's a key requirement that we need outdoor space. So it'll be interesting to see how that does shape out, and if developers also in the future begin to cater their plans and think, all right, maybe we knock 10 square meters off the internal space and create a little outdoor or 10 square meter balcony, whatever it may be. But I think that's going to be an interesting one to watch for the next few months, years, and see how it does unfold. Now, when you guys when REalyse are looking at the data and trying to, let's say, report these trends that we are seeing in the market at the moment, is there things within the data that you generally gravitate towards, or you feel are most indicative of what's happening in the market at the moment?
So we've got about 700 or 800 different data sets. And I think everyone in the team has got their own favorites, and users have got their own favorites. I've got my own favorites that I tend to look at. But it can be different for everybody. So I tend to look at the rental yields in order to understand, is this market likely to be an area that is going to attract investors to it, i.e. it's got high yields, everything else being constant. Let's imagine that for a second. Yeah. And are those yields changing? The yields, are they just at 7% and that's how it's been through all time because that market's got something in it that means that they can never go higher or lower? Or, is it at 7% and declining because prices are going up because that area is becoming more attractive, for example? That I think is really interesting one. Time on market. So, you're talking about the agent saying it's, 7 to 14 days. Like, that's great. That's getting like a hot market for that type of property. So the same thing, I'd look at the time on market. How long is it taking to sell particular types of property in a particular area? And that'll change from location to location types. But it's a great measure of, what's the demand like, really.
Yeah, definitely.
And then more recently, one that I've started looking at, I didn't previously look at it too much, but is the number of planning applications in an area, the size of them. Are they big enough to actually, is there enough of them, and are they big enough to really change the characteristics of an area? Because we've seen that if you have, you get these big urban regeneration schemes that go on. But the interesting thing that we found is that they obviously have not necessarily obviously, but they have a knock-on impact on all of the existing properties that are around there.
Yeah.
So you get a huge new development, and then that, maybe brings the value of an area up, and that actually has an impact on the Victorian 3-bed terraced house around the corner. Yeah. That goes up as well beyond what it would have done ordinarily. So
that's true.
Those are three.
That's an interesting point. That is an interesting point. Going back to your point about yields, and I think that's a great thing to also watch. But if we were just talking your Birmingham's, Liverpool's, Manchester's, and those emerging cities in the UK more so than Liverpool. But have you been monitoring how those yields have been behaving since the start of the pandemic, or is there any insight that you can give us there into their shifts or their trends over the last 18, 24 months?
So one of the interesting things that I noticed a little while back was that cities like Birmingham and Manchester and Leeds and Liverpool were operating in a totally different way to London, and in a different way to many other areas. So London, let's just take prices as a simple example. Property prices, they did like a U shape. So they were going up. They were either going up or flat, whatever they were, just before the pandemic, and then they went down, and then they came back up again to the same sort of level.
Right.
Outside of London, specifically in the suburbs, during this kind of U-shaped period, that's when all the prices and rents went through the roof.
Right.
But what was interesting, because all these people were moving out of London and going into the suburbs there.
Of course. What
was interesting in Birmingham and Manchester, etc., was that they actually just consistently kept going up. It was like nothing had happened.
Wow.
I was looking at it like, really? It's bizarre. What's going on? And just, they just keep on going, which is fantastic. I think.
Yeah.
There's definitely a shift in. Oh, sorry.
No, it's all right. I was going to say it's interesting when you mention those cities then and the trend, or looking at that graph, and instead of seeing a big peak or a big trough, whatever it may be, how it has kind of just maintained that steady growth. And looking at Liverpool for the last 12 months, seeing 10.5% price growth over the last 12 months, and still achieving yield. Okay, for a new build, you're looking more around 5.5%, but for existing second-hand or secondary homes, you're still getting rental yields between 8 to 12% if you pick in a student, more a student-centric area. But that's incredible. Price growth is a massive bonus, and that's something that we're looking for in an investment. But then getting some really strong rental returns and a rental market that's sustaining its growth as well. It's not just a 24-month phase, and then we're seeing people move out of the city. It's managing to retain its residents. People want to be in these cities, and now we're seeing the market trends really illustrate what we have seen over the last 12 and 18 months with that shift up to these cities. So I think it's fascinating. That's a fascinating point. And then London is an odd one. It performs in its own little beast, doesn't it? But now, we're starting to see prices creep back up slowly. There's, I think, a bit more competitiveness for the higher end of the market, and people who are kind of that you could say sub £4 million mark. It's moving a bit slower, but the appetite is definitely coming back for London, and I think it has a part of international investors have a part to play in that as well, in wanting to have some UK real estate and take advantage of how there hasn't been as strong a price growth over the last 12 months in London, at least, and they can get in for a decent price now, really.
Great opportunities out there. When you combine that like capital appreciation with the rental yields, and you get the targeting just right, you just look at it and go like, well, what else is going to beat this other than just like random bets on cryptocurrencies, which is great for volatility, let's say. If you're looking at like a 10% year-on-year price growth and you're managing to get like a 10% gross, so let's call it like a 7%, 8% net yield.
Yeah.
It's 18% year-on-year. That's amazing.
It's impressive. And yeah, you're not getting that with your money sitting in the bank. You're not definitely not getting that sort of return. You can take a risk on the crypto, but tread with caution at the end of the day. I'll be staying away for a little bit longer, I think. But yeah, a very, very good point. Now, I guess we've touched on the emerging markets in a sense, but have you seen? So we've identified that there's really, you've got London, and then you've got your Birmingham, your Manchester, your Liverpool, Leeds, and those cities, so to speak. But have you started to notice in your data a bit of a shift towards places that you wouldn't have thought of investing in before over the last 12, 24 months, really?
Yes. Yeah, is the short answer. I took a look at Bristol. It came to mind simply because one of the people on the team has moved there. I was like, oh, I wonder what's going on in Bristol, and then compared Bristol to Birmingham and found out you're getting a higher yield in Bristol and properties are renting faster than in Birmingham. So, pound for pound, put your money in Bristol.
Yeah,
which
that's
is not like normally on the kind of the top 5 list, is it?
No, exactly.
But it's a great city.
Yeah, it's also a very developed city as well. It should be up there with the likes of the 4 or 5 that we have mentioned earlier. But that's interesting to know, and I think we'll continue to see these cities evolve. One that I keep speaking to Dominic Neshi about, the co-founder of Wealthi, is Newcastle. I see a massive amount of opportunity in Newcastle. And I'm really excited to see what the impact of the Saudi Arabians taking over, or the Saudi Arabian consortium taking over Newcastle Football Club is going to have to play on the city. But I think that's another one that's worth noting for sure. Be an interesting one to watch, I think.
Definitely. No, Newcastle's a great place. I mean, they got the university there, and yeah, it's a really strong market.
Yeah, definitely. Were there any other cities that stood out to you, or was it Bristol was the main one that stood out above the rest?
I suppose off the top of my head, that was the one that popped out at me when I was just kind of anecdotally looking at it the other day. There's some other areas that I've got in mind that are sort of good investment locations. There's one that I've been holding on to. These ones. 2 years now, and I checked in on it the other day, and it's Dagenham in East London.
Hey,
I think it's pretty good because the yields there are still relatively high, and even though prices have gone up about 15% in the past couple of years, I think there's still quite a lot of potential there.
Interesting.
So I actually gave that recommendation, a more detailed one actually, to a recruiter who worked for us a little while back, and he actually bought, and he's apparently done very nicely from it. So
that's an interesting one, because I guess the good thing about these areas that are just outside of London as well is the fact that we're continuing to see that rippling effect coming out of London as well. So if you can manage to get into an area like Dagenham, for example, or even if you look at West London and places like Slough, for example, which are undergoing massive transformation now, you can get in for a pretty good price point to own some London real estate, you could say, and capitalize on, like you mentioned, some relatively high yields and prices that are going to continue to grow quite strongly over the next or the foreseeable future, you could say as well. So that's an interesting one that worth noting. Were there any others that were on the tip of your tongue in terms of areas that you'd be investing at the moment?
I'm giving it all away. So central Manchester and central Birmingham, coming back to this kind of regeneration piece with all these new developments, because there's a lot that's been built and there's still more to come. And I think that's just going to keep changing the landscape and the nature of the centre of those cities. So I would definitely take a look at that. And then Ashford, the stop that is on the Eurostar between London and Paris, which I never really understood why it stops in Ashford, but it does.
It's an interesting one, that.
I wondered, how did some planning person at Ashford manage to persuade someone on a train line.
Exactly. And now you've got Netflix, and I think Amazon have a warehouse down there as well. There's a few big businesses that have moved into the area. Yeah, it's really transformed. Yeah, I think with the help of the Eurostar, and it goes to show the power of these connectivity links as well. But yeah, it's managed to get some very affluential businesses down there in comparison to the area. Somewhere you wouldn't think you'd have a massive Amazon warehouse or a Netflix studio, but there you go. It's a fantastic opportunity. Oh, sorry, I was just going to say that I saw that yields on flats were really good there, and that the capital appreciation on houses was kind of just shooting up. So it's one to watch. On the topic of connectivity, what part of the how do you think HS2 is going to be or have an impact on Birmingham? What sort of impact do you think it will have on Birmingham? Is there any predictions that you can give in terms of growth you might or people might be expecting?
So no hard numbers, but it's pretty obvious that if you improve the connectivity of a location, the value does tend to go up. I think it's going to be a relatively long play in some ways. So you obviously had the announcement of it, and then you had like little pops and ripples of pricing. And then as it actually gets closer to being reality, you kind of have a smoother increase in the value gain. But in the same way as we're just talking about Ashford's there, where, okay, I didn't know that these companies had put warehouses in, and then that brings employment and different types. So you'll get these changes coming in the future on these different stops. You'll get, I don't know, Amazon sticking a warehouse next to it. Let's just use that as a hypothetical.
Yeah.
And then, 5 years time or 10 years time, you've got even further appreciation around these connectivity points.
No, definitely. I think it'll be interesting to see how it does play out. We've already seen PwC, KPMG, Goldman Sachs, just to name a few, move up there. So I think we'll continue to see some more large international corporate businesses and move into these cities, really, which would be interesting. I'm really excited to see how. I think the UK market over the next 5-10 years is an exciting place to be. I think a lot's going to change, and it'll be interesting to watch what happens. Now, last question from you, and I know you've got to run shortly, but the last question was, how do you think the market will perform over the next 12 months, or 24 months, you could say?
So it's a question I get asked quite a lot, and I really should have like an obvious answer to it. But the thing is, with a business like ours, is that you see that there are thousands of sub-markets all doing their own different things for different reasons. And so having a kind of an overview doesn't really do it justice. It's like measuring the average height between a tall person and a short person. It doesn't really make sense for either of them. I think overall, you'll see the market continuing to go up. We've got crazy low interest rates and loads of money that's been printed, and people are moving around, changing their lifestyles in all different ways. Working from home as an example, moving to suburbs, moving back to the city, etc. So all this activity is going to have an upwards impact, I think, on prices and rents overall. I think there's some areas where it's still potentially overstretched, in terms of the affordability. And whilst it has been, prices and rents in those areas where it's been a bit bizarrely priced, let's say, for too long, they have been coming down. They've probably got further to go. So, lots of variations, but I guess that kind of speaks to the advantage of having REalyse, is you can spot those little locations and get on and little trends in places.
Exactly. Monitor the market, monitor where you might be interested in the market for people out there listening. But yeah, I think that's a good breakdown. I think it will be very interesting to see how these little sub-markets do behave, because UK performs in its own strange ways sometimes. The UK real estate market does, and you'd think in some cases that there's multiple countries within the UK in the way that it does behave and the trends that you do see. But I think it's a good point, a good way of putting it, and something to monitor over the next 12 months. So that's great. Thank you very much for joining me today, Gavriel. I really appreciate it, and understand you're a busy man. So I'm very, very thankful for having you on today. And for everyone out there listening, if you want to go and check out REalyse, we'll leave a link in the description below, and feel free to reach out to Gavriel and his team and and they'll be more than happy to lend a hand and give you a demo of the platform. It's a great platform and a great tool, and something that I'm sure we'll be using very often as we continue to grow Wealthi in the UK. So thank you once again for joining me. It's been a pleasure. It's been an honor to have you here.
Thank you, Chris. Thank you very much for the invite, and have a great day, and look forward to speaking again soon.
I will. Thank you very much.